Yeah. And the closer you are, the better. John, welcome to the Ride Boundless Podcast.
What's up, man?
Thank you for being here.
Happy to be here.
Thank you, man. How was the drive? And then after that, how do you introduce yourself?
Drive wasn't bad. Orange County,
OC.
Yeah, OC. It took about an hour, 45 minutes, so not too bad.
Yeah.
I've been here before, and it's like 2.5 hours.
Of course.
Like
Sometimes even longer.
Even longer.
I was going to Irvine, the Pepperdine campus there, because like every other, like once a month we had to go there. And that it can be an hour and 50 minutes, or it could be fucking 3 hours.
Dude, I remember one time after Thanksgiving, the day after Thanksgiving, it took me 4 hours to get from Glendale to Orange County.
Yeah.
It was a complete
It's insane.
joke. Complete joke.
Two things real quick. Side note. I ride motorcycles everywhere. I swear to you, there's been so many times that I'm like, this is a fucking superpower. I mean, splitting through lanes is a superpower. Just do. Oh, there's an accident. They close down the freeway. Yeah. Fuck you. Yeah. So lately, I have been feeling it's safer than a fucking car.
Yeah, I believe it.
You're trapped.
Yeah, I believe it. And I mean, any logical driver, too, isn't going to be like, hey, here's a motorcycle. Let me get silly with them. Like,
right.
I mean, that's just
right.
a horrible human being that would do that.
Well, not only that, but you pass cars so quick that they don't even get the chance.
Yeah.
Most people freak out, move out of the way, and then later on, they'd be like, oh, I should have cut them off, you know? But we're already past it.
Yeah. It's a smart move.
How do you introduce yourself?
So, John, obviously.
You wear so many hats.
I wear so many hats. You know, it's for the last, almost 20 years, I've been a financial advisor. And that journey has been pretty amazing. You know, I didn't come from money. I grew up in Montebello. My father did construction, stay-at-home mom. 4 brothers, 2-bedroom, 1-bath house, the typical Latino story in LA, right? Or just anybody that doesn't come from money anywhere.
Right.
And I just wanted to take care of my family. I wanted to get ahead, and I really wanted to learn about money. Being Latino, we're told, don't trust the stock market. Don't put your money in investments. Just work and have a bank account, put your money in the mattress, and maybe you get lucky and buy real estate, right?
Yeah.
And I always knew there was more because, reading these stories, I'm 42, I'm an elder millennial, but, I didn't grow up with the internet. And so I would go to the library, read encyclopedias, right, read books. And I just knew that I had to somehow get into the money game. And I started in insurance, and then eventually I got my securities license and started doing investments. But where I got an advantage was I learned from a lot of people's mistakes. I've seen people from all walks of life. Everyone regrets not doing more when it comes to money when they were younger. Yeah. And so this hindsight that I've learned from people became my foresight. And I'm like, how can I, for myself, my family, my friends, and my clients, use these stories and make sure that I don't follow that path of what their hindsight was. And so making strategic moves, and a lot of it goes against what we're taught is people who are not born with money is, do you have a correct amount of insurances? Do you have a trajectory for your real estate? Do you have a real estate fund? How are you going to buy? What's your plan with it? There's just so much that goes into it. And if you're not born rich, and rich is defined to me now as someone who doesn't have to worry about the price of gas or the price of milk or dinner, right? Like that's the new rich, right? Like, we're not talking wealthy where I have servants and, I have Rolls Royces and private jet. Like that's not even rich anymore. That's extreme wealth. I'm talking rich just being where you don't have to worry about little things.
Financial freedom.
Financial freedom, right? Like where it's like, hey, I have a good job. And that's just the reality is most people in America, have jobs. And I think we're at a time where it's getting really convoluted where, if you don't hustle till you die, or if you don't want to start a business, people are looking at you as a negative thing. Like lawyers have jobs. Doctors have jobs, bartenders have jobs, police officers, firefighters, nurses, all of these are jobs. And those people I feel are getting caught in the white noise because they're like, well, I don't want to start a business and I don't have uber wealth, but how do I get ahead? And so I became what I like to call the Walmart of advisors, where I want to work with people, the masses. And in Walmart, every now and then you'll have a Lamborghini or a G-Wagon, right? Someone had to run and get diapers or whatever. But I always wanted to help the average people, because if average people have diligence, they have time, they can get rich. They can have a way better life when they stop working than they did when they were working. Because if they make, 75 grand a year, over 30, 40 years of putting money away into employer benefits, IRAs, they can have an income stream with Social Security, pensions, 401ks, IRAs of low 6 figures. So they can literally have an enhanced lifestyle. Whereas somebody who makes, 3, 4, 500,000 a year, it's going to be very, very hard to replace that lifestyle. Right. So, and I looked at it and said, everyone average is getting neglected. Think about it. You have a bank account, right? Most average people have bank accounts. When you walked into your bank and the teller says, hey, you know what? Let me introduce you to our financial advisor in-house so we could help you with your financial planning journey.
Yeah.
They don't do that.
Not at all.
But if you had 200 grand, 300 grand in your checking account, they roll out the red carpet. Financial institutions only want to help people with money. Most firms have a minimum of $100,000 for you to invest with. Average people don't have that. They don't have 10 grand saved. And now they're getting left behind because they don't have $100,000, $250,000 to know what to do with money. And so I really got a passion for that. And now I'm at a stage where I really want to do more of this because I feel the voice of reason for the average person, like what to do with your money to take care of you and your family. And there is a lot of things that can go wrong for people.
Examples?
So one of the things right now I'm seeing a lot of is in LA, right, is accidents. Okay. Whether it be medical, whether it be car accidents, and we'll use insurance as not a scapegoat, but as a horrible example of what happens to people. The fires recently, right?
Right.
People thought they had insurance. Some people got dropped. Some people had little a gray area mistakes that they made, and they're not being covered by their insurance companies. For example, people that had trusts on their house. Most people get their house in a living trust. Well, when their house burned down, they had homeowners insurance. Like, we're fine. But if they didn't add the trust as an additional insured on the policy, the insurance company does not have to pay their claim because they violated not having the trust as additional party on the insurance. Right. And they're finding this stuff out now. But why didn't the broker, why didn't the company say, hey, you have your trust, but it's not on the insurance policy. If you need it, we're not going to pay. Like, no, it's buyers beware, right? It's up to the insured to figure that out. Other examples are, if they had homeowners insurance, let's say they got it 15 years ago and their rebuild on their dwelling was, say, $200 a square foot 15 years ago, which is a reasonable amount of insurance.
Right.
But if now when they're finding out and filing their claims, they're like, here you go. You have a 3,000 square foot house, $200 per square foot to rebuild. Here's a check for 600 grand. Like, wait a minute. It's $500 to rebuild. And they're like, that may be the case, but we're only paying you what you had insurance for. The consumer is supposed to look every year and readjust their policies and say, hey, what's the new dwelling rebuild cost in the area that I live? Yeah. And insurance companies, brokers will never say that. So those are like...
Why won't they? Why does that happen so much?
So
I mean, it's obviously a broker problem.
Here's the issue, okay? Broker's job is to sell insurance, right? And unfortunately, most people are going through tough times. And so if a broker called an average person and said, hey, you need to up your dwelling, you're paying $5,000 a year right now, it's going to be $8,000 a year.
Yeah.
The client is going to say, it's too expensive, I don't want it. And they're going to leave them and find another insurance broker.
Right.
That just tells them what they want to hear, right? And
compared to if they leave it, they'll just fucking stay with it and pay the bill.
Yep. And so insurance brokers are paid residual income, right? So if clients leave them, then their livelihood's affected.
Yeah.
And I understand because I have friends who do insurance. They're like, John, 99% of people, I make them aware of this. It's too expensive. Too expensive. He goes, I understand. He goes, so I stopped even bringing it up to people because now they were leaving me and they're going for cheap insurance. But cheap is of lesser quality, right? Like, who wants cheap? And that stuff translates directly to people that if they get in a car accident or a motorcycle accident, like, people will be screwed. I have friends that are personal injury lawyers, and they're telling me about 40% of the accidents they've seen this year in 2025, they are caused by people who are driving without insurance. And so if someone hits you without insurance and you don't have proper insurance, uninsured, underinsured motorist, you have no claim. There's nothing you can do.
Yeah, you're fucked.
You're done. And people think, oh, well, I'll go after them personally. Someone driving without insurance doesn't have any assets or money. Yeah. There's nothing to go after. And that costs a lot of money to try even go that route. Whereas something as simple as someone looking at their insurance policy and saying, hey, I don't have underinsured motorists. And so let me up it up to $100,000, or I have $100,000. Let me up it to $250,000. We're talking like $10 a month more. And so these little mistakes that people make can financially ruin them, because a lot of people don't understand. They get hit by a car, any treatment that they get and a settlement for pain and suffering, when their property gets fixed, no problem, right? As long as they're okay, sure, maybe they have little injuries, they get treated. Any settlement they get is 100% tax-free in personal injury. So if they get $300,000 from an insurance company, that's $300,000 in their pocket.
Yeah.
Like, so not only do they get better, but they can get paid dramatically. And if the car that hits them doesn't have adequate insurance or no insurance, it's called UIM, underinsured motors. Then they go ahead and tap into their own insurance. And since it's not their fault, their rates don't get raised. A lot of people are so scared to file claims, and insurance companies are just like laughing, like, why are these people filing claims?
Yeah.
Like, they have insurance. Yeah. And everyone thinks, oh, my rate's going to go up. Not if it's not your fault. If it's your fault, then there's really not much you can do.
And even if it goes up, it doesn't matter. You're still going to recover a lot more.
Pocket $300,000.
And not only that, I'll give you another example. You get into an accident. I had an accident, and I don't want to talk about it too much, but an ambulance ride and a hospital visit, and got a bill, $75,000. If I don't go through my insurance or deal with the insurance, I'm going to have to pay $75,000.
Yep.
If I go through my insurance and I go with an attorney, they're going to negotiate that down to pennies.
Pennies.
First of all.
If you even have to pay anything at all.
If I have to pay anything. But first of all, they're going to get that down to pennies, and then once they get it down to pennies, they're going to negotiate, pay it off. It's off my record, it's off my credit, and I have people working for me because I have insurance, because I have the right coverage.
Yep.
But that's the other thing. Some people are like, no, I don't want to get nobody involved. I don't want my insurance to go up $400. I'll deal with the $70,000 fucking what?
Yep. It's like, I'd rather have $250,000 tax free and have my insurance go up $400 a year.
Right.
Right. Like, the net benefit is ridiculous. And that's assuming there's not serious injuries. Like,
right.
I mean, we all see those signs on the billboards, like, $21 million recovered, $15 million recovered. Like,
what do those mean?
So
we see them, and I know what it means, but what does it mean for the average person? Because somebody sees that and they're like, well, is that total? Is that one case? How did they get that money? What's the situation?
So those are per case. So if somebody you see one of those billboards, and I'm going to preface this where, just because someone's on a billboard doesn't mean they're the best lawyer, right? They're just a mill that has maybe private equity money to fund, one of those big firms. I heard they spend $36 million a year on print media advertising. $36 million a year.
That's fucking wild.
It's insane. They're a nationwide firm, $36 million a year. So just because someone's on a billboard, first of all, doesn't mean that they're a great lawyer. Any lawyer is going to take a case, but that doesn't mean that they can max value your case. It's the non-billboard attorneys that I actually think are better in the sense, because they're saying, hey, let's get you better. We're going to help you get max value for your case and get what's owed to you, instead of trying to just turn it quick and get a quick settlement, right? Because that's what the insurance companies want. They want a quick settlement, because then they'll like, we'll settle this person for $50,000, because if they went the distance, we might owe them
the insurance company.
We might owe them $300,000.
Right.
And most average people, they get $50,000 dangled in front of them, they're going to do it, right? But on a large settlement, the way it works is, it's typical where the client gets 1/3. So if you see a $10 million settlement, 1/3 went to medical bills, 1/3 goes to attorney fees, and 1/3 goes to clients. And again, that money to clients is tax free, and that's just standard. One of the
I want to add something to that, because we've had this conversation. I've had this conversation with a few people, and when it's structured like that, I get that. I understand that, but I like reversing it. You're going to get based what the hospital or the damages are. Yes. And then that gets multiplied by 3, and that's where the cuts are at. I just feel when it's backwards, it's like, well, wait a minute, what? But when it's like, hey, this is the total, and now we multiply this by 3, and that's what gets paid out, and that's the split.
Yep,
it's the same thing.
It's the same thing, and it's one of the mistakes that average people make is, well, let me shop around. Attorney has great reviews, great whatever, and really they should always ask people who have experience, right? Don't go just advertising like, hey, do you know any good personal injury lawyers, right? And then you can say, hey, I've dealt with this. I know a lot of people. These firms are great, and so the mistake people make is, well, this firm said they'll do it for 20%, right? Yeah, and clients don't really know how to read a retainer. So I've seen some retainers for some of my clients that says, if it's closed in 90 days, you get 20%. Anything after 90 days is 45%.
Right.
There's nothing that happens under 90 days, but people see that and they're like, oh, I'll get more
6
money.
Months.
6 months.
I'm dealing with one right now, 6 months.
There's no way things happen, but people see that and they just go and sign up, right? And they don't realize till after.
And you know what they told me? We got all the bills, and we're going to submit request, for a demand for payment. The request letter will take anywhere from 4 to 6 weeks to get done.
Just for that.
Hold on. What the fuck, dude?
It's so sad, and it goes like this with everything, right?
Yeah.
Everything with average people, they're always getting taken.
Yeah, of course.
And it's because they blindly trust without research.
In
multiple times
before they get it.
They get taken to the cleaners from everybody. That's like every billboard. Do you see? You look at like beers, right?
Right.
It's average like us having beers and drinking, right?
Yeah,
Drinking
yeah.
they're not catering to highly sophisticated, people on yachts, right? In their advertising,
right?
Like the consumerism is catered towards average people because unfortunately, average people just spend. They know the price of everything and the value of nothing, right? And so they need a voice. They need people that they could trust that's going to give it to them straight, right? And say, hey, look, this is how it works. Take a step back, take a leap forward, don't jump across and just start signing things. Really do your research and see
and take your time.
Right?
Yeah.
Like take your time and find someone that's going to help you. You're going to get better no matter what. The baseline of attorneys is reasonable, right?
Yeah.
No matter who you choose is going to be good, but find someone. And I always recommend, I love referrals, right? Like vouch for people. Ask your network, hey, who should I turn to? Do you know any good lawyers? Don't just go with someone at the scene. Some of this stuff is scary, right? And it's like, there's so many consumer protections out there that people are completely unaware of. For example, somebody loses a limb. A lot of credit cards have dismemberment as a benefit to your credit card.
Yeah.
Where if you lose a finger, you can probably get $25,000, $50,000 from your credit card. You have accidental death and dismemberment built inside credit cards. People don't know that.
That's insane.
And
I
attorneys
did not know that.
And attorneys don't tell people, not the good ones, don't tell people this because then they don't get no money for it. But the attorneys that I know, they're like, well, let's look at your health benefits. So let's look at filing short-term disability, long-term disability. We'll help you with that. Let's look at negotiate for how much you're going to get back on your car that you lost. So let's look at your credit cards and see, do you have accidental death and dismemberment? Let's look at your life insurance policies because a lot of life insurance has what's called benefit riders. And if somebody gets a critical injury, and say if you have $1 million life insurance policy, the filing a claim can get you $500,000 tax-free on your life insurance policy. People don't even know this. And this is where...
That is one that I don't know. I mean, I've heard about it, and I do know, but like it doesn't make sense. So
here's why. So life insurance for me in my household growing up is a scam. You don't talk about death. It's you pray, right? You pray. You don't do those things. It's a scam. It's not a scam. Anyone who dies who has life insurance, the life insurance company pays out. And nobody wants to die. My friends, my family, myself, we don't want to die. And I say this half jokingly. You know who really doesn't want us to die? Life insurance companies. Because if I'm paying $20 a week and I die and they owe my family $2 million, they're going to be like, that was a horrible investment. Right. So they don't want you to die. What insurance companies want is people to say, I don't need this anymore. My house is paid off. My kids are grown. I don't need it. And then they're like, we got premiums for 20 years and we don't have to pay a death claim. Thank you. Because all insurance companies do, whether it's property and casualty, which is car insurance, homeowners insurance, health insurance, life insurance, all insurance companies do is take the premiums from people and they invest in the stock market. They invest in real estate. They invest in private equity. They give money to banks to loan on houses. So all they do is take all the premium dollars and they invest it and they make billions of dollars every single year on all the money that they use for premiums. It's no different than most successful businesses like Home Depot. Home Depot has a very large trading floor. They have people trading the stock market with the revenue. And so people just think, oh, these companies make money on the products they sell. No, they use the money and then they invest it. Yeah. They invest it into the stock market, into mutual funds. Some companies even invest in movies, private equity. It's amazing how they leverage money.
On the Ride Boundless Podcast.
Yep, right.
Taking it out.
Yeah. It's amazing how this leverage works. And it's so funny because average people are taught, oh, the stock market's risky. There's different types of risks. There's political risk. There's timing risk. There's so many risks. But the biggest risk is not having your money invested in the market.
Right.
That's like the biggest risk of them all is the opportunity risk is like, well, like right now what we're going through, right? The market being down so much. if you are over 55, it's tough, right? Because you need that money to live. But if you're under 55, you can make moves right now, and just dumping it into the market. Because what people don't understand is, if the stock market goes away, the entire banking system fails. Okay, we are so technologically advanced right now in society that if there's no banking system, the world is over. Like, we're going to be fighting for bread and water. Like, if the financial services entire system fails, then modern society as we know it is done.
Right.
Like, literally, we're going back.
I hope you invested in bullets and guns.
Yeah, literally. Hope, and everyone says, oh, I have gold.
I didn't.
Well, guess what? If you have gold and there's going to be some tougher person than you that jacks you for your gold so they can go buy bread and water for their family. Right. Like, what are you going to do? Have scales and, hey, let me buy this bread and gold? Yeah. Like, that's why you have these, people like, oh yeah, I have gold, I'm safe. There's nothing safe, right? Our system is so dependent on financial services and leverage, banking, credit cards, debit cards. We don't want this thing to go south, because then we're done for. Like, everyone's done for. People in retirement right now, like pension funds, right? Everyone thinks they love their pensions. You work their whole life, then they get $5,000 a month till the day they die, right?
Yeah.
Pension funds take money and they invest in the stock market. They invest in real estate. So even when people think these safe investments, Social Security, they take money and they invest it so that they can continue to pay people out. Everyone, even without knowing, is invested in some way.
Right.
Because that's what has to happen. And so the mistake people make is not doing it for themselves, becoming their own financial advisor.
Yeah, they work for a company. The company's investing, but they're not.
They're not. They're not. And I get the argument of like pensions. Like, first responders, they have great pensions, right? School teachers, construction, great pensions. But what happens is, after working their entire life, a pension and Social Security is designed to replace the same standard of living you had when you worked. But most people say, I want to travel, I want to go fishing, I want to ride my motorcycle, to North Dakota and get an adventure bike and go to Baja, whatever you want to do. That takes money. So if they can't afford it when they're working, how are they going to afford it when they're not working? Right. So people with pensions and Social Security, they need to do an IRA on the side, and that will be their fund. Everything you want to do, your travel, your vacation, your dream bike, you can have that outside of your pension, and that's your fund because you have 20, 30 years of putting money into that. So then you have an enhanced standard of living. Because everybody, if you ask them, when do you spend the most money? Oh, my day off. Why? Because I have nothing to do. Right. Well, when you stop working, every day is a day off. Yeah. Like, you're going to want to go grab coffees or lunches or go on motorcycle rides or buy motorcycles or whatever it is. People are going to want to do that, so they're going to need more money. Right. And these insurance contracts, going back to the one with the life insurance, it is sad that average people are taught you don't need that. Every wealthy person I've met, they transfer wealth in two ways: real estate and life insurance, because it's such a little bit amount of money for a huge benefit. And average people, the insurance today, because people are living longer, is the cheapest it's ever been. Right. Yeah. And people I have $50,000 through work. That's nothing. If you make $50,000 a year, that's 1 year of income replacement. Yeah. You're supposed to look at, okay, I'm going to work for 20 more years, or I have a newborn. I want to take care of them for 20 years or 18 years. You're supposed to multiply how long you need the insurance for by how much you make. And that's not even factoring in raises. So say if somebody makes $50,000 a year and they want 10 years of income replacement, that person needs $500,000 of insurance just for the income replacement. But if they say, hey, if I pass away, I want my kids to go to college. I have 2 kids, I want to give them $200,000 each. Well, that's $400,000. So that now they need 500 plus 400, they need 900,000. And then if they say, I have a mortgage, I owe $400,000 on my mortgage. Okay, well, if you pass away, do you want your mortgage paid off? Yeah. Now you need another $400,000. So that right there is, what is that? $1.3 million on somebody who makes $50,000 a year. But the benefit of looking at things like that is now, with these new life insurance policies, they have these benefit riders that if you get critical illness, critical injury, you get diagnosed cancer or some
you fall, brain injury,
concussion from a car accident, anything that adjusts your health, essentially, they'll advance you up to half of the death benefit. So if somebody has $1 million of life insurance and they get in a bad car accident and they have a concussion, which is known as a traumatic brain injury, and they file a claim with their life insurance company, they will say, here's $500,000 today, tax-free. Yeah. And then when you die, $500,000 goes to your family, so you still have the $1 million. But that's a lot of money up front, tax-free. And that's not in addition to filing a personal injury settlement with a good lawyer. This is an enhancement. So a lot of people don't even know, and because they're trained again that life insurance is, it's a gimmick.
Right.
Research life insurance. How many life insurance companies have not paid when people die? You won't find one. To this day in America, there's never been a situation that wasn't fraud, right? If somebody blatantly committed fraud.
Google right now.
Right?
Yeah.
Their life insurance, because you never hear these on the news. You hear the fires, right? You hear the healthcare thing with what happened with, the CEO of with Louis Mangione, right? You hear all these things. They're not paying. My kid has cancer. They're not paying. They're this or that. They're denying claims.
No, they pay so good. It's the number one fraud thing.
Yes. Yes.
like it's so good.
Especially where we're at. Yep.
That people have, dedicated their life to, like, fuck it. We got to do it because it's 100%.
100%. People get what their insurance policy is, and average people aren't taught to look at it and research and say, what does this mean?
Right.
Like, that's where people get screwed, is because they don't have and I get it, they don't have the resources. And this is where I'm trying to create more awareness with it, right? Like the things you have to do to protect you and your family, the simple things. It's so easy to make money in the markets over time.
Right.
Over time. There's no such thing as getting rich quick, right? And if you do, it's luck. And I'm all about luck, right? I buy lotto tickets, right? I own a small percentage of my portfolio into crypto. Like, if it does work out and I get lucky, I'm going to be super grateful because I got lucky. But if you're not in the game, if you're not buying lotto tickets, if you're not in crypto, if you're not putting money in the market, there is no opportunity for luck.
Right.
And so everything needs to be strategic. Like, I'm not a fan of crypto. I made a good amount of money in it because I said, you know what? If this works out, then it's a good play because it's a bona fide asset class. So I carve out a small percentage, 3 to 5% of my portfolio, and I bought crypto years ago, and it's worked out. But if I put all my money in crypto, it's risky. Just like all your money shouldn't be in the market, just like all your money shouldn't be in real estate. You need true diversification, and that's what I try to educate clients on. And the problem is most advisors are always trying to sell what their company sells.
Right.
When all you have is a hammer, everything looks like a nail. You talk to a life insurance rep, life insurance is the answer for everything. Oh, you don't need a 401k. This is better, right? You talk to an investment manager. Nope, you don't need anything else. All you need is asset management.
Talk to a car salesman.
You talk to
this gets you a job. This will be everything. This will make you money.
You talk to a Honda dealer, they're not going to go tell you to buy a Toyota.
Yeah.
Right? You talk to a Benz dealer, they're not going to tell you to go buy a BMW. Everyone's selling what their company and what they get paid on.
Right.
And so I don't do any of these insurances I'm talking about, but I educate clients on how to do it and what to do. And this is something cool that all you people could look at that are going to listen to this. Do some research. You see these things. Home Depot stock, 35 years ago, I put $1,000 in. It's $12 million today.
Yeah.
$12 million off $1,000. NVIDIA, 20 years ago, $1,000 today is worth $5 million. Right? Like it's just all of these things are at our fingertips, and people think it's too good to be true. It goes back to, it's just about your time in the market, not timing the market. Nobody knows how to time the market. Professional fund managers don't know how to time the market. If you would just invest passively into like one of the indexes like S&P 500, Russell 2000, Dow Jones, NASDAQ, those have been proven that to outperform professional fund managers just by setting it and forgetting it.
Yeah.
By putting $20 a week. And average people think, what's that going to do? It's going to do a lot. $20 a week for decades will literally make millions of dollars. But they all think that's not going to do anything. It's just the youth that people have, especially millennials and Gen Zs, they can make extraordinary amounts of money by just doing bare, basic, vanilla investing strategies.
Right. I mean, one of the best ones for insurance that I try to advise people, and I'm guilty, I haven't done this, but if you have 2 brothers, 3 brothers, whatever, 4 brothers, whatever the case is, all pitch in and buy your parents fucking life insurance. It's guaranteed.
It's a better return than an IRA.
Right. You spend $200. Yeah, you're gonna spend maybe $200, $150, whatever it costs for whatever 20 years.
Yep.
It's guaranteed. It's guaranteed, and your parents are gonna feel good about it.
Yep.
And everybody's gonna feel very good about it as long as there's no weird stuff going on in the family.
Oh,
but
for sure.
That's
and here's the thing,
that's a great investment.
Especially if people are going to be helping their parents and taking care of them and spending money.
Right.
Like to recoup that, is smart, right? Like, hey, I'm going to be helping with her care or with this, or, my spouse is going to take care of my mom, whatever it is, right? Why not get the family together and say, hey, let's put $250,000 on mom and dad each. And then when they die, there's $500,000 tax-free that comes to the family.
To pay off the home they live in.
To pay off the home they live in.
Live the dreams that the mom or dad wanted to give their kids.
Buy a cabin in Mammoth that you have family reunion to celebrate their life, right? There's these things, and it's all legal. It's perfectly legal. There's no issue with it. It's how business is done.
And again, it's just my mind works backwards. As opposed to don't get insurance, die, and you left nothing.
Nothing.
And not only nothing, you left debt.
Debt.
You left debt, and now it's going to fall on the family. It's going to fall on the kids.
It's
going to fall on everything. Because we could talk about the benefits, but the problem when you talk about too many benefits, you're like, dude, this is too good to be true.
Yep.
Especially when you talk to people that don't understand it. You're like, it's not good. But what is the opposite of that? It's full debt.
It's full debt.
Zero. Guaranteed zero.
I'll give an example. I have it on my parents, okay? And I want my parents to live forever, right?
Of course.
And if they live to be 120, me and my brothers will be about $200,000 in premiums.
Right.
But we get $4 million tax free.
Right.
But what if they die tomorrow?
Right.
Then we're $15,000 in premiums and get $4 million tax free.
Right.
Right. Like,
what if they get in an accident and they get brain injury?
Yep.
Well, and then you get the 50%
money to take care of them,
to take care of them and put them in the right housing. And then now it's not a toll on the family. It's not a toll of like, oh my God, we have to. It's your turn to take care of mom and dad, whatever the case is.
Then that's what siblings rivalries.
Nobody wants to be taken care of.
Nobody wants to clean me,
parents,
bathe
exactly.
me. Nobody wants that. Nobody wants that. And then even long-term care on the parents. You can have in-home care through long-term care insurance. That if your parents get sick, they have nurses come and help them with their daily living. Get groceries, clean the house, bathe them, change them.
It sounds like we're talking about a miracle product, and it's just something that's been around forever.
It's been around forever. It's been around forever. But again, a fish doesn't know they're wet. Most average people, wealthy people, they all have these things in place. But average people don't even know where to look. And it's there's so much value in it, right? It's looking at paying pennies for dollars that are coming tax free. Right. And everyone thinks what you just said sounds too good to be true. It's not. It's there. It's just really understanding these products because people say the system's broken.
This episode should be sponsored by somebody. One of you motherfuckers better call me and come on.
The system is not broken. Yeah. It's working exactly how the puppet masters want it to keep people down and uninformed, uneducated, and not make moves. Because when average people have money, they're not dependent on people. Right. Like, so the system is literally, it's not rigged, but it's not ever going to provide this. People say, how come they don't teach us in high school? Well, what do you think? They don't want average people having the knowledge that you need to do to become wealthy.
Well, not only that, that's not the priority. The priority is focus on working, being an employee. Yep. That's it. There's no, it's funny because I was listening to a Kanye thing and Kanye was going on one of his rants, which I appreciate a lot, to be honest. And he says, there's history class, but there's no future class. Yeah. There's no finance class. There's no how to do your credit class.
I think he even said that too. Everyone's a free slave.
Yeah, everybody's a free slave. Yep. As a matter of fact, then I was reading a report that school started by the military. Yep. Because there's a lot of people that didn't have like that confidence, or they wanted to stay at home and they didn't want to be independent. And they were like, well, let's just create schools and we'll start training them at young age.
It was Rockefeller and the military, where Rockefeller said we need to make, that's why there's a bell, come in from recess, school starting, teaching people how to just toe the line. A figure of authority tells you what to do and you do it. Yes, ma'am. Yes, sir. I'll do my homework. Yeah. Like it's such a brainwash. A brainwash and
manipulation.
It's interesting though, because all this information's out there, right? Like you could research, are we in a high tax bracket? Are we in a low tax bracket? ChatGPT, Google Gemini. I love Google Gemini. It's version of like ChatGPT.
Yeah, I like Grok.
Yeah, Grok. I like how to start a Roth IRA. It gives you pages and step by step, and you'll have sponsored ads from Fidelity or Charles Schwab or Robinhood. Start it here, Chase, right? Like everything's there, but people are paralyzed of they've always done what they've always done, and they always get what they've always got. Right. And so you'll hear things, and especially in like lower income communities, you'll hear the financially responsible ones that are trying will prepay for our funerals. So they'll give a funeral home $100 a month, and then when they die, their cremation is paid for.
Yeah.
But with that $100 a month, they could have had a
$400,000
$400,000 life insurance policy.
You said that out loud. I'm like, that's terrible.
It's terrible.
And you're right. They'll do that.
And they're like, we're planning. We don't have to pay for the funeral for grandma. Where they could have had a $400,000 insurance policy come into the family instead of prepaying for a $15,000 cremation.
Right.
And so it's just looking at things differently. And,
because the funeral home sold it properly. That's all.
That's it. It's a business, right? And I get everyone has to make money. I understand that. But why?
I would love somebody from a funeral home to be here and be like, how would you break this down versus insurance? And be, fuck insurance.
Yeah, Yep, 100%. They're going to tell you no, because again, when all you have is a hammer, everything looks like a nail. Buy my product. Nothing else is going to suit you better because this is what I'm selling.
Right.
And so,
of course. But do you think? I mean, obviously, this is my thought. Do you think it's just? Let's get besides. It sounds too good to be true. Mm-hmm. Let's go with people just don't want to talk about death. The middle class
does not want to talk about
does not want to talk about it.
Nope. They don't want to talk about
Is that another thing? It's just so taboo. It's like I have a good buddy of mine, and he's wealthy. He's wealthy and famous. And I was like, hey, I know the head specialist of UCLA cancer. He runs the cancer department. I'm gonna go to his house and blah blah. You should swing by. He goes, I don't like meeting people like that because then you need people like that, and I don't want to meet people. It's one of those things, and it's that same mentality.
Is it Latino?
Yeah, of course.
Cultural markets, right? Cultural markets.
And same thing. It's like, hey, get life insurance. Ay, no, eso malo. No, you get it. It's culture and fear. Fear of the topic.
It's a lot of cultural things too, right? Like we're taught it brings negative to us. Just like you don't talk about money. Why? Everyone who's wealthy does. Hey, how can we get a deal going? Let's make money together. Can you get me that contract? Let's do this, right? Like people, it's just cultural differences, right? Where most people of color or minorities are workers, right? We're taught to work hard, and it's noble, it's respectful, but we're not taught what to work hard at. I look at my friends who are white or Persian or Korean. You're going to become a doctor so you can start your own practice. You're going to become a lawyer to start your own practice. You're going to work hard, but you're going to own stuff and you're going to have employees. Yeah. Right? Most Latinos are taught just work hard. Yeah, come on, mijo, work hard.
Work for the
bank.
La cerveza del día, for your beer of the day. And
that's it. Beer next meal.
Yeah.
Right? And it's like, I'll remember when I got into financial services, my mom was like, how are you going to get clients? You don't know rich people. Just go get a job at a bank. It's a good job.
Yeah, it's secure.
Right? It's secure. Just get a job. And I'm like, if I had listened, she's like, I'm glad you didn't listen to me. But I get where it comes from because it's hard to make it, right? It's really, really hard to make it. And so I understand where they're just looking out for their kids because they don't want them to feel the failure, because most people will fail when they try to do their own thing. But if you aim at nothing, you'll hit it with amazing accuracy. Right. You got to try. And maybe you work 10 years as a landscaper and you save up and you come up with a plan and have good mentors and say, I'm going to start my landscape company, right? Like trying to do it doesn't mean everyone's going to win, but
of course
there's at least try. But while you're trying, you can be putting money in IRA, putting money in mutual funds, putting money in crypto, organizing your insurance. Like you can be doing these things. It's like when people say, I want to buy a house. I'll ask them, where do you want to buy? I don't know. What area? I don't know. Have you been pre-approved? No. So you don't want to buy a house.
Right.
Let's go get you pre-approved at a mortgage lender or your bank, whatever it is, broker, whoever you use.
Let's get a fucking neighborhood.
Let's look at a neighborhood. Let's say, do you have kids? Do you want to have kids? Then you don't want to be in a crappy school district if you want kids, because then you got to look at private if that's important to you.
Right.
So don't look for a starter home. Maybe get a home in a better neighborhood because you want kids within 5 years. Right. And so really mapping out, because people want to buy a house, but they don't know what they can get approved for. So if they're looking at somewhere like Studio City and the average house, single family home is 1.1 million. Well, what if they get pre-approved and they said, all you can get is 500 grand? Well, then they can't buy in Studio City. They got to start looking where at. But if you don't take these steps to see what I can get a loan for, because the banking laws are so hard to get loans now, they'll turn to people like my dad, my grandpa. My dad always owned a house, had a family of 7 on a construction worker's salary in Los Angeles. In 1983, he bought his first house for $28,000 and he made 41 grand.
That's wild.
Right? And so they'll look at that like, oh, my dad did it, my grandpa did it. But
that's different.
Yeah, it was a way different time, not only for the price of real estate, but for how easy it was to get a loan. Yeah. You could walk in and say, here, and they give you a loan that day. right? And the Big Short film is based on that, right? Where they were showing that, and it's so hard to get a loan now. So people need to, I think, put in the work, see what they can get approved for, and then that way now they say, you know what, this is what I get approved for. Let me save more, get a bigger down, improve my credit, reduce debt, find out what neighborhood I want, and then go for it. Right. It's just strategy, right? And what I've learned throughout my career is to be unbiased, because the problem is most advisors give it from their lens, right? Oh, I don't believe in this. If an advisor tells you they don't believe in something, don't use that advisor. It's not a religion. Right. There's nothing to believe in. It's strategy of who are you, where are you at, where do you want to be, and how do we get you there? Right? Like that is the strategy. And it's unfortunate that most advisors are just selling what their companies want them to sell.
Yeah, of course.
And for me, I always tell people, look, I don't do this, but it's not my business, but you need to do this. Just call your local insurance rep, right? Or whatever it is, right? And give them the guidance. And people are always like, my companies are like, well, you can have them do this. I'm like, it's not going to benefit them. Like I'm not going to put someone and advise them to do something just because I get paid or that's what you want me to sell. But it takes a very, very honorable person to do that. Yeah. And so it's really difficult, but these hacks and one thing I want to make sure we say, because I know we have limited time, was something that I feel could help everybody, especially people that are on your podcast, motorcycle riders, right? Because I love motorcycles, right? You know, and it's fun. It's a thrill. It's a lifestyle, right? It's a passion, but a majority of them don't have good insurance because the cost of entry isn't that expensive. Like I was at the track the other day. I took my 911 to the track, and my buddies, you know, are tracking, you know, $200,000 to $400,000 911s, right? Yeah. And on one of the tracks, they had motorcycles, and we just went to go check it out, talk to the guys, you know, have fun. Yeah. And we're talking to them, and like sickest bikes were like $12,000, you know, $10,000, right? Yeah. And so it's like the barrier to entry isn't as much as cars, right? But most of them, like, we don't even have insurance. Our track insurance for a 911 is $25,000 a year, right? Just for track insurance. I'm like, you guys have track insurance? They're like, no. They're like, because it's so, like, if it crashes and it's done, it's not that big of a cost for me. I'll spend more in track insurance than I will. But when you're tracking a, you know, $350,000 911, like you want that track insurance. Track, of course. And so what I learned was motorcycle riders don't have premium insurance policies on their motorcycles ever. And one of the things that they can do is that to make it less expensive is increase their deductible, right? Because you're better off having a $2,500 deductible. Most people have a $500 deductible, right? Meaning that the first $500 of damage comes out of your pocket and the rest is covered by insurance. But if they raise the deductible to the highest amount on their insurance carrier, now they're
I didn't even know you had 2,500. They have mine's at 1,000, but I didn't know about the 2,500.
So ask and every insurance company is different with their max deductible.
And it just comes out from the payout.
It comes out from the payout. But what saves the clients is the premiums get drastically reduced. So if they're paying $200 a month on $500 deductible, now having a high deductible, they might pay $75 a month. But on a motorcycle, you don't care about the deductible, right? Because it's not that big of a property damage, okay? You want a high insurance benefit. Right. That if you get hit by somebody without proper insurance, uninsured motorist claim, underinsured motorist claim, somebody hits you that doesn't have premium insurance, whatever it is, right? That's where you want to really take in, because that's what your settlement's going to be based off of, right, is the insurance limits, not the deductible.
Right. That's the least of your concerns.
That's the least of your concerns. So I would tell them to raise the deductible limits to the max the insurance carrier allows.
And raise their coverage.
Right. Get $250,000 uninsured
motorists.
Or add coverage. Like that is one thing that every motorcycle rider should do, is increase their deductible, because again, in those accidents, the bikes are going to be toast anyway, pretty much, right?
Any accident, a motorcycle.
Any accident's toast. So what do you care about a deductible? You want your limits to be high so you can get medical covered. You can have recourse to pursue a claim with a good personal injury lawyer to get money for pain and suffering. And if you have a $250,000, $500,000 limit, you can get up to $500,000. Yeah. Like that's what average people, and again, if you get hit by a semi truck and you're hurt bad, those are the big payouts for clients, right? Through personal injury, but most of them aren't that. And you don't want it to be that. We're talking about like irreparable damage to the person.
Right, of course.
So you want to be able to get treated. You got hit. It's unfortunate. Let's get you better. But with the right limits, they're going to benefit financially because they had the proper insurance.
Yeah.
So I think that's a smart thing that everybody can do.
Of course. Yeah, minimum.
At a minimum. I mean, it's...
And if we want to talk about motorcycles, take a safety course. That brings down your insurance.
Yep.
You know, it gives you better experience, better training, better everything else. When people get into an accident, so I've told you about the accident where the guy almost got 20 mil and then obviously was cut in 3 parts and stuff like that. You know, when I saw this guy at the hospital, this guy was like, oh, man, I'm speaking to somebody. All I want is $70,000 and I want to go back to work. And I was like, dude, do me a favor. Shut the fuck up. Don't you talk to anybody. Don't you fucking talk to anybody. Let me handle this. And I negotiated everything, blah, 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 blah. Anyways, long story short, he got $20 million.
Yep.
You know, that guy's lucky because I intervened and I was there and I've witnessed this and I've experienced this. I've seen people screw. I know a girl that got into a horrible Uber accident and, you know, and then she's like, oh, well, how did that guy, you know, blah, blah. Well, I negotiated, we worked it out and there was multiple coverages. Uber's crazy. And, you know, they have $1 million policy. She's like, well, they only paid me $5,000. I go, well, that's because what? And she's all, well, that's what they offered me. I go, so you didn't have an attorney? Nope. I go, did you see doctors? She goes, I went like a couple things, but then it was going on my insurance or something like that. And they offered me $5,000, so I took it. They don't pay a lot. They don't pay a lot at all. And I'm like, oh my God, you know, and then I'll give you one more where I learned this lesson that I want to share. Fuck it, I'll say it. My ex, you know, she had a lawsuit with her employer. And long story short, they cut her, I think, like $15,000, you know, and it was just like a, you know, whatever, a claim.
Go away.
Yeah, go away, kind of, exactly. Well, 2 years later, I run into the attorney accidentally, and he hears my name because I'm on the phone trying to, like, you know, do something.
Her attorney or the company's attorney?
The company's attorney. And he hears my name, and he's like, I know you. And I was like, you don't know me. He goes, yeah, your ex is this, and your son is this. And I was like,
who's this dude?
Goosebumps, like, what? Yeah. I go, how do you know? He goes, oh, I was the attorney defending the company. I was like, and how do you know me? And he goes, well, I heard you guys were like separating, so I was going to hit you up, see if I get some dirt, but I decided not to. By the way, she could have got so much more money. And I was like, fuck, like, you know, hearing it from the opposite side made me realize, like, that's the insurance. That's what these attorneys are doing. They're trying to pay as little, and whatever they're offering you, there is a huge cushion in most places.
I'm
this
talking
is why
probably 95% more.
Not exactly, not double, not triple, 95% more. And this is what attracted me to your services and what you do. Which, by the way, I want to ask, how do people get a hold of you, or how do you train people? Do you do like master classes? Do people book a consulting session with you? Do people come into your, like how do you deliver this message?
Yeah, so, you know, it's
other than coming on the Ride Boundless
Podcast. Yeah, the Ride Boundless. You know, for me, it's I run a referral based business, and so I would ask if anyone has questions, they reach out to you, and specifically. And then if they need assistance, they could reach out to me, right? Because
which I would just direct,
I want people to feel comfortable. And most of the time I tell people, look, this is what you need to do. Go and do it, right? Like, I truly want to make a change. And I'm at this point in my career where it's like, I can't work for a company anymore because all they want me to do is be the hammer. Right. When all you have is hammer, everything looks like a nail. Sell our products. I want to be an advisor. So I'm starting to really explore, do I do a Finance 101 education workshop where people start tuning in, whether it's on YouTube or socials, where I'm just giving this knowledge to people. And I'll have like office hours where they could tune in and ask me questions, even about finance. I just have such an amount of knowledge of all things to do with money. Right. And with social now, I can give it to more people. And through that, if I become popular, then I have a YouTube channel, right? And I get all the benefits of just doing that. Maybe start a podcast. And I want to switch that route because
especially with the success stories. I mean, that's content for days, dude.
I have so many that we couldn't even talk about it. Like it's It is just
no, you can talk about it actually.
yeah, I can, you know, but it's we're talking about things where large settlements come for clients, and then what to do with that money. It's structured settlements, right? Like you hear those things, like you have a structured settlement called JG Wentworth, right? You want to get out. People, they get large settlements, they get structured settlements, kind of like the lotto. You could pick all up once, or you can take it over 26 payments, right?
Right.
So there's structured settlements they can do. There with a good advisor, they'll tell them, look, you're getting
26 payments like monthly?
Annually. 20, like with lotto. That's a lot. Lotto. It's a structured settlement. It's an annuity essentially.
Right.
But if people have a large settlement and they've never had that type of money before, I would tell them put 10% into the market. Right. Let's buy Google stock. Let's buy Netflix stock. Right. Let's have that money grow. Let's have a plan for it. Get out of debt. Buy a house. Whatever it is. Right. There's so many things that people can do, and I try to identify who you are, where you're at, and where do you want to be, and here's recommendations to get there. Because there's a reason why 95% of a lot of winners go broke in under 10 years is because
isn't it within 2 years?
It's even higher. Yeah,
it's
even higher. I just want to err on the side of caution,
right?
But it's even higher, and it's because when you get a large sum of money and you don't know, it just goes. Yeah. The biggest lie ever told is, oh, when I have money, I'll start making moves and have a strategy and plan.
No.
Never. You'll fly first class instead of coach. You'll eat at better restaurants. You buy more expensive wine. You'll have better cigars. You'll have nicer clothes. You'll get nicer watches. Like that is the truth of the matter. It's habitual.
2, 3, 4 cars.
Yep. If you don't have your baseline set up of a strategy of 5% of my money goes to my hobbies, right? 10% goes to investing into future retirement. And that's one of the things that I hate about my industry. Everyone's saying, oh, sacrifice and put it all away for the future. No, you have to enjoy the journey. Like if you're focused too much on the future, you're never going to do the things that get you to your journey financially.
I saw a post, I'm so sorry, yesterday that said, you might not even live for the future you're worried about.
Yep, 100%. and in reality, it's true.
I was like, gosh.
It's so true. And that's where it's like...
And we're not even... And we're talking financially, but, you know, that's like everything. Like
it's everything.
Stress.
It's all encompassing.
Yeah, exactly.
So if you... I firmly believe the happiest people that I met in my life have money today, tomorrow, and forever. And then when forever ends, they leave things behind to their kids, their grandkids, because especially millennials and Gen Zs, even if they don't have kids right now, but they want kids, they're not thinking, oh, one day I'll have grandkids. But if you have kids, odds are you're going to have grandkids, right? So at that moment, everybody wants to leave something behind for their legacy. Everyone on their deathbed or at the end of their life starts thinking about, what am I leaving behind? Well, not just money, but values, stories, property, inheritance. Like I want to be remembered. And so all these things are things that everybody from every community feels when they get to the end of their life. And again, it's not that I'm old. It's just I've worked with these people and I've seen them. White, black, Asian, Latino. They all have the same feeling when it gets to the end of their life. Right. It's like, what was my journey? I wish I had done more. Everyone regrets the things they didn't do opposed to the things they did at the end of their life.
Of course. So there's a quick statistic of people in their dying bed. And it was like they asked, what are the top 10 things that you regret, you know, that you didn't do or did or whatever? What did you regret? And number 2 was, I didn't tell the person I love them enough, you know, which is like, they didn't get to spend the time, et cetera, because they were slaving, you know, away. And number 1 was, I didn't quit my job on time, or I didn't change my job. You know, it was based on that same level, because people get trapped in the system that they feel uncomfortable changing with opportunities or insurances like this.
And this is where, especially, and I want to work with the average person, right? Which no financial advisor, again, wants to do. Like, do I like wealthy clients? Yes, I've made moves. I'm grateful for I've been. But like at this point in my career, I want to help average people because they're never going to get great advice from somebody who's legit. And I'm not trying to pat myself on the back here, but I am a licensed Series 7, 66, 24. I've done it for almost 20 years. I came from nothing, and I know what it takes for average people. I look at my dad, construction his whole life, 42 years. Not once did somebody say, put away $10 a week into a mutual fund because it'll help you. My dad would have done it. Right. And thank God he has a pension, right? But if it wasn't for that, he'd have nothing. And nobody ever, they saw.
And not only that, but the timing that your dad executed, it worked out. That's a lottery on its own.
Yep.
Otherwise, if he was still doing the same thing today, he wouldn't be able to buy that house.
He's screwed. Yeah. He'd be screwed. And this is where, sure, is it going to, maybe he wouldn't have 5 million, but if you told my dad today, you have an extra 500 grand, he'd be like, oh my God, that's amazing. I'm rich. Right? Like, it's just these extra little things, but nobody, the bank or his church, nobody paid attention to him because he was an average person. And so I feel that getting my message out to average people, how to enhance their employer benefits, how to understand their situation, how to get their insurances in line. And again, I don't sell car insurance or none of that stuff. I just want to get everyone's strategy down.
Well, literally what you were talking about, the motorcycle coverage and car coverage, updating this and updating that, that's not profitable for you at all.
That does
that's
nothing
just
for
like
me.
Protect yourself.
It does not.
That's information that people don't have.
And so instead of selling financial products and making commissions, I want to educate people and become popular on social and use that as my revenue stream, because then I'm completely unbiased. Right. I'm completely unbiased to, oh, you should do this or you should do that, because I'm not going to be getting paid from anything. I'll be getting paid through my social type stuff, through sponsorship deals or whatever it is. So I want to give a complete unbiased, real approach. And not that I don't respect people, because I do, but I'm going to tell people the truth. I'm not going to worry about hurting their feelings. I'm going to tell them what they need to do for them and their family to have what they want.
Yeah.
And that takes a lot of courage to be able to do that, because everyone at the end of the day is reporting to somebody. But if I report to nobody, I get to be completely unbiased and tell people what they want to do. Even this insurance stuff, nobody's getting this advice from their insurance person. I have a friend.
You need to do master classes.
I'm trying to figure it out.
Where it's like, hey guys, look, man, there's free coffee, there's donuts. Come here on Saturday. This is just information.
And I'm thinking about calling office hours and doing that on Saturday from 12 to 2, where it's open forum on Zoom. People can come in and ask questions, because I have a friend, and I won't say what company it's for, but he started, ever since I told him, to increase all of the uninsured motorists. He got a call from his company and said, why are you doing this all of a sudden? He's like, oh, because I want to give my clients the proper amount of insurance amounts. And they're like, we prefer to have lower uninsured motorist coverage for our clients.
Really?
Yep. And it's a big company. And so,
fun fact, I had an accident. It was a hit and run, and it's like, well, was it a hit and run? And then I was like, what are they? Now they're questioning me, right? Mm-hmm. And luckily there was witnesses and everything else. But I started looking at statistics, and it's like 50% of accidents in the state of California that are fatal are hit and runs, let alone everything else. So even statistically, without the witness, isn't that fucking crazy?
And so if you don't have uninsured motorists,
you're fucked. And if your husband or your wife was driving the family car that is still owed $40,000 because you leased a Lexus, bye-bye.
Yep. And gap coverage.
And the gap coverage doesn't cover anything if there's no fucking insurance.
Yeah. And that's
not enough insurance.
People,
uninsured motorists.
Uninsured motorists. Yeah. And it goes back to even umbrella policy. See, a lot of people, umbrella policies, I have an umbrella. And if you don't have an umbrella, you should get an umbrella policy. They're not expensive. I like Chubb. Chubb has a great umbrella policy, CHUBB. I think they're a European company. And it's
terrible name.
Yeah, terrible name. It's a guy's name. Yeah,
terrible
Chubb.
name.
I got Chubb.
Sorry,
I got Chubb. I got Chubb.
Hey, let's keep it clean, man.
I got
but
Chubb.
in LA, you got some Chubb, man.
It's like a 100-year-old company out of Europe. It's funny.
Yeah.
But the thing about umbrella policies is it kicks in limits after. Right. And so it covers all of the stuff, right?
Aflac, right?
I don't know if Aflac does umbrellas. They have
but isn't Aflac that's only work, right?
That's only work. That's work, like short-term disability stuff. But the umbrella policy is after your limits, and say I have a $3 million umbrella, so I can tap into that and get $3 million in addition to my $1 million limits in my property and casualty. But here's what people don't know. Most people that have umbrellas, they don't realize that in the umbrella policy, it'll say this will only kick in if you have a minimum of $250,000, $500,000 of coverage on your primary property and casualty. So if people have 100, 300, and they're like, I'm fine, I got an umbrella, it actually avoids it because you didn't have the bare minimum on your personal. But the umbrella policy company will still sell it to you.
Right.
And be like, you didn't read the fine print.
Right.
Right. Again, there's all these little things. When I tell people that, there's no way. And they read their umbrella. They're like, all this time I thought I had it, but I didn't meet the criteria. I was like, if you needed it, that's when you would find out that they're not going to pay. Again, it goes back to they're not denying claims. They're paying what you have. Just people are unaware of their limits, unaware of the exclusions, unaware of how it works. So insurance companies are made to seem like, oh, they're cheating. They're not. They're just not telling you to fine print. They're assuming you're a reasonable person, and reasonable people read their insurance limits and understand them.
Yeah.
So it's not this big conspiracy of them not paying.
Right.
They're paying exactly what you have. And if you're in the dark of what you have, you're going to get what you get.
Of course. And then there's another side of the insurance, kind of random fact, but I knew a lady, it was an older lady, paid off house, had her car, blah, blah, blah. She hit a motorcyclist. And the motorcyclist, I forgot how bad the damages were, but there was about $100,000 of damages. Mm-hmm. Well, her insurance was only like $15,000. They went after the house, and they took this lady's house.
Yep.
And I spoke to the attorney that did it, and he's like, "This guy had medical bills.
Yeah.
He had we had no other option."
Yep. A random drill went off.
Whoa, that's an air pump. That is the most randomest fucking scary shit ever. That's that old lady fucking. She died. Or I don't know. God, yeah, that was fucking terrifying.
But in that situation, right? It's so true,
right? And again, it's terrible. Oh, poor old lady, loses her house after having a paid off house, blah 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 blah. But it's like, well, the poor old motorcycle got hit by
almost died.
It almost died. It
was $500,000 of medical bills.
Same thing. And he's with his kids. In fact, what's right, what's wrong, and that's where insurance comes into play, where you need protection. And this sounds so pitchy and so whatever, but it's like it's not. This is real life
neither
stories.
You or I sell property and casualty insurance,
right?
So there's literally no hidden agenda here.
No, this is just all informative.
It's informative, and this is just one thing, right? There's so many things like medical benefits, how to enhance your medical benefits, get tax deductions with FSAs, dependent care FSAs, limited care FSAs, HSAs. Like, people are always looking for deductions. Medical benefits is one of the most beautiful deductions you can get. Of understanding your employer-sponsored medical benefits, disability, like especially motorcycle people, right? It's dangerous, right? Like it's looking at it. It's like, if you don't have a private disability insurance and you actively ride, it's a mistake. And here's why. So people have their group benefits. Oh, I have disability through work. That's if you're like an invalid. Like, you have to have traumatic damages to get long-term disability, which nobody wants, right? Like, where you're paralyzed or something like that, right?
Right.
And most group benefits is like, well, you have to go without a paycheck for 6 months before your short-term kicks in. And most average people are like, I can't not work for 6 months. Yeah. Like, what are you talking about? And people don't know this until...
I think it's 70% of the U.S. is 2 paychecks away from being homeless.
Homeless. Yep. Living paycheck to paycheck. And so they can't not go. So what they do is they go back to work. Right, they go back to work because they don't realize they thought they had group benefits, but they don't. Where I was working with some firefighters, and they're like, one of their firefighter coworkers got cancer, and they're like, "There's no group benefit." I'm like, "I know." They're like, "We were told that we're taking care of their short-term disability." I was like, "No, he has to not work for 6 months in that example." And he's like, "This is horrible." So there's no paycheck for 6 months, and then short-term kicks in. So private disability through a private company is so important. Here's why. Employers that offer disability, people can even get it, which most of them can't. But even if they could, you're going to have to pay tax on it. Okay. It's going to be come in and you pay tax just like you do your check. If you have private disability through a private company, and there's a lot of good companies that do it, any premiums you get from them is tax-free. So they give up to 70%.
And we're back. Sorry about that.
Yeah, no. So where I was at was, the disability from a private company. The way it works is again, the trap is the employer benefits. Something's better than nothing. If you apply for individual,
the trap is
employer benefits. It's the trap is employer benefits. If you can't get private disability, then something's better than nothing, right? And the employer one's fine because you can't get private. Costs nothing to apply.
Right.
But here's how the benefit works. And
please.
Sorry. And if it goes back to Private disability includes mental stress, pregnancy issues for women, right? Like it covers everything.
That's what that was with my ex. It was pregnancy harassment or something.
So it covers disability, covers all of that. Right. Private disability. Okay. And the way it works is you get 70% of your income tax-free. So say somebody makes $100,000 a year, easy math. They have a private disability and they have a mental breakdown, or they get hurt and they can't go to work. You know, a nurse throws out her back 'cause she lifts a patient. She can't, lift patients in the beds, right?
Yeah,
and anything, it could be mental, it could be stress related, it could be physical injury. They will get 70% of their income tax-free. So on $100,000, that person with a private insurance policy gets $70,000 a year tax-free. They will make more money by not working with a private disability kicking in than they did when they worked. Because someone who's single makes $100,000, they probably.
I mean, it was because of an injury, and they have to deal with other consequences. But financially,
they'll
get a break.
They'll get a break
to breathe and recover properly.
And get this, so say if somebody's a prison guard, okay, or a police officer. I'll use a prison guard example.
A government employee.
A government employee. This one's specific because I worked with the guy. He had a private disability insurance, okay? He got beat up in a jail by the inmates, and it messed with his psyche, right? You can imagine, like he almost literally got beaten to death.
Right.
And so when he went back to work, because he was one of those people, I just want to go back to work. And everyone was like, what? So he went back and he had panic attacks. So he went to the doctors and they said, you can no longer be in a prison because your mind is too affected. Right. And so he was at the time 40 years old. PTSD. He was 40 years old. That was his career. Started when he was like 22. And so his disability, and he made about $200,000 a year with overtime. He was getting $140,000 a year from disability tax-free till he's 65 years old. Okay. And when you have private disability, it's called own occupation. So as long as you cannot do the occupation you had, you can collect your money. So he went and then became a criminal justice professor at a community college where he was making about part-time another $100,000 a year. Yeah. So he's getting $140,000 from his private disability, tax-free, and he still can earn an income and have a second career. So now he's a criminal justice professor making $100,000 a year part-time. So he's double dipping.
Set, yeah.
He's set. And if
he's not double dipping. I mean, it's double dipping, but his benefits paid. That's what his pays.
That's what his insurance was. And
right.
So people don't realize this, that you can still have another job once you get your disability because it's the own occupation rider that's inside these policies.
Right.
Some of them will even pay for, if you're putting $10,000 a year to 401k, it'll pay the $10,000 a year for your retirement plan in addition to 70% income replacement.
Right. But this is all information. How did he find out he had these benefits? Because there you go, And I know these situations a lot in the military. When people do
I'll say, I pointed at me for those who are on audio. Yeah. It's me. I explained it to him and he's like,
good point.
He's like, what? Yeah. I'm like, yes.
Yeah.
And he's like,
well, it's all informative. But same thing, I see a lot of, I see this in the military a lot. And again, this is not so much insurance, but this is back to the ego and information, et cetera. When people finish their 4 years or 10 years or whatever they're done, everybody has this like macho ego thing, blah, blah, blah. And it's like, hey, you're going to be discharged. Do you have any problems?
No, I'm good.
A lot of people, no, I'm good. I mean, their ankles fucked up, their knees are fucked
up.
Their
mind,
they're
stressed
back,
out, yeah.
But they ignore it because it's the macho thing to do. Like, I don't need fucking anything, blah, 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 blah. And 5 years later, they're fucking kicking themselves in the ass. They're disabled. They have bigger issues. They have bigger problems. And it's back to an ego thing. And this could have been, same thing. This guy could have been like, well, fuck it. I don't care about my benefits. I mean, you laid it out properly where it made sense. But otherwise, he still would have been working there.
And guess what?
And lost his job and because he's traumatized.
And insurance pays because that's what you pay for.
Right.
Like insurance isn't like, we're not going to pay.
Point.
They'll give whatever your benefits are. The mistake is, as long as you qualify for it, where the mistake is people don't know what their benefits are.
Up to them to make the decision.
Yep.
You see, and people make the decision before they even make the decision.
So he, quick math on it. Quick math, $140,000 a year. $140,000 a year. And it happened when he was 40 till 65. Is that for me?
Yeah.
That's fucking old school hip hop. Yeah, that's not for me, is it?
Yeah, definitely coming from you.
Oh yeah, they got some mystical. Silk the Shocker. I was listening to 2000s hip hop.
Yeah.
That's weird how it came
you
up.
don't hear anything like the
that's
planes and
funny,
the gates.
dude.
You don't hear anything of that.
So $140,000 a year for 25 years. It happened when he was 40. It's till age 65. So that's $3.5 million tax free that he's getting from an insurance company. He had the policy.
He was paying into.
He had a policy for about 2 years where he spent about $200 a month. So that's $5,000 in premiums he spent, and he's getting $3.5 million tax free in benefit. To put that in perspective, he paid about 35% tax rate. So to have $3.5 million, he would have, that's equivalent in California, $4,725,000 of income. Divide that by 25 years. That is $189,000 a year that he would have to make to have that same benefit.
I'm thinking with all these numbers, it makes, because there's a point where you're like, this is too good to be true. This is too good to be true. How is the insurance company still in business? Well, that's because there's just too many stubborn. Well, first of all, not everybody gets injured.
This on the same day.
If on the same
insurance
day.
company is just like the banks.
Right.
Okay. The entire banking system. Go to your bank. Say if you have $75,000 in there, right? Say I want my money. They'll be like, you can't come back tomorrow.
Right.
Right. The entire financial system, including insurance companies, operate the same way. Is that not everybody is going to take out their money out of a bank the same day? When it does, it causes a Great Depression. Right? That's what happens.
Yeah, Mary Poppins.
Yeah, Mary Poppins, yeah. And insurance is, because you wonder, how are they paying all these life insurance when people die?
Right.
Because they have 50 million insured, and maybe in 1 year, 10,000 people died.
Right.
Right? Like it's car insurance. Not everyone's crashing their cars. They have millions of people. And again, they just take that money and leverage it and invest it into investments.
Right.
So that's why on Super Bowl, like how many insurance commercials do you see? Insurance is one of the most profitable businesses in the world, is because the amount of people that get paid out is so minimal to the percentage of clients. In life insurance, I'll give you a funny stat. Not funny, but interesting. Of all the life insurances in America, only 1% are paid out when people die. 99% are never paid out. And it's not because the insurance company's screwing them. It's because people get a 20-year term, expires after 20 years. They have a 30-year term. The kids are grown, house is paid off. We don't need this. Let's cash it out. We don't need the bill.
They lose their job.
Yep. We lose their job, cash it out. Say they have one of the permanent insurances that build up a cash value in them. We put in $100,000, honey, over the last 25 years, and we have $300,000 of cash value. Let's go buy that boat. And so insurance company says, here you go. Because if they hadn't died, they would probably owe $1.5 million to the family.
Right.
So it's whether it's the cash value ones where people use the money to supplement retirement, which is totally fine, or they don't need it anymore, or it expires. So only 1% of all life insurance owned in America is paid out in death claim. So the 99% is how the insurance company makes money. It's extraordinary. It's absolutely extraordinary when you actually know how insurance companies make money. It doesn't become too good to be true. It becomes of course. Of course they pay out.
Of course. Yeah.
Because they have so much profit.
Yeah.
And so and this topic was about insurance, right? Because it is the foundation of everything. The foundation of a portfolio isn't necessarily how much money you make. It's what are your asset classes. And you're more likely to get into a car accident than you are to die, right? You're more likely to die in a car accident than you are in an airplane, right? Like it's especially in large metropolitan areas like Los Angeles, like it's risky out there. And I have 5 people that I know recently that got hit by people in Los Angeles with no insurance, no driver's license.
Yeah.
Right? Like it's common in these areas. Especially Los Angeles, it's because it's so
New York,
expensive.
Los Angeles, Miami,
all these areas,
all these big cities, the Texas border, Arizona, immigration,
and because it's so expensive to live here. So what do? Why would I pay $200 a month for car insurance when I could pay $50 and have the minimum liability?
I got to add this for my motorcycle riders. Understanding this made me choose my fights and battles more strategic. So if there was like a piece of shit car giving me shit or trying to cut me off, I'd be like, hey, fuck you, this, that. But then I'm like, this guy has no insurance. This is a piece of shit. This guy doesn't even have license. This guy does, oh, hell no. And this is what I mean. I could escape fast on a bike. Like, get the fuck away from me.
You don't got good insurance. I'm out.
But you see an Uber car. It's like, do you have a passenger? What's going on?
You see Amazon truck. If I'm going to get a hit.
Hey, you cut me up. Fuck you, mister. Like it's different. But you start looking at those things different.
And I hope nobody needs their insurance because again, you're hurt.
Right.
But if you are hurt, you might as well get pain and suffering for it.
Right.
Like you might as well get something out of it. And
it's funny because I'm sorry to cut you off, but it's funny because it takes time and money and effort to take care of yourself, and people don't do it.
They don't do it.
They don't do it, and then not knowing, like, hey, recover. Yeah, it's going to be difficult for you now, but you're going to be recompensated. You're going to recover. You're going to do a bunch of stuff. But a lot of people are like, no, like I just want to go back to work. Like they get too desperate.
Even the Bible talks about it. It's interesting. The Bible says in one of the scriptures that my buddy told me, he's like, it is a sin to know what you ought to do and not do it. Right? Like everyone knows what they need to do,
right?
But they don't do it.
Right.
And it's just like being healthy. Eat less, work out more. It is very hard to do, to actually do that, to eat less and work out more.
Right.
But the principle is simple. It's a simple foundational principle is how do you protect yourself? Like, and insurance, it has a bad rep, but only because people are uneducated on understanding it. If people,
why does it have a bad rep?
Because people think that insurance companies are out to screw people, right? And they hear stories of people getting screwed, but the sad reality is the people screw themselves by not understanding the insurance.
Right.
Like everyone has a horror story that they from themselves or someone they know with insurance.
Yeah, but that's because they had the wrong coverage.
They had the wrong coverage.
Or they had under coverage.
Because nobody says, hey, you know what, honey? It's a beautiful Saturday. All right, let's go out and review our insurance and our disability and our employer benefits, and let's make sure where our liabilities are covered. Like, no, then let's go to the beach. Let's go on a motorcycle ride.
Yeah.
Let's go out to lunch, grab a coffee. Let's go see a movie. Like nobody is taking the time and to review their insurances when they have time off, life, kids, family, fun, whatever it is, right? Going on a motorcycle ride, hitting up Newcomb's Ranch, whatever, right? Like we have one of the most beautiful routes to ride motorcycles and cars in America in our backyard.
Right.
You know, Highway 2, right? Angeles Crest. Like, let's go ride with our buddies. Like no one's thinking, let's really understand this. And then who do you go to? And someone's been wronged by somebody or somebody's incompetent. And again, I'm not saying advisor out to get people, but most of them aren't dedicated. I've dedicated my adult life, almost 20 years, to learning the game. And it's unfortunate because I've learned from others' mistakes and regrets. Like I said, their hindsight has been my foresight. I looked at it, I'm like, man, I'm going to make sure that I have proper uninsured motorists. I have an umbrella policy. I have disability. I have long-term care. I have life insurance. I have good health insurance. I get tax deductions through my HSAs. Like, what does that mean? What is an HSA? What's an FSA? Because when people are enrolling their benefits, they have these options, right? And everybody just gets, what's the easiest one? Yeah. It's work to understand what this stuff is. But for example, on tax deductions are important, right? On an HSA or FSA, I use pre-tax dollars to buy eyeglasses.
Yeah.
So instead of when I spend $3,000 for eyeglasses, that's $3,000 that I got a deduction on, and it comes back to me tax-free. If I didn't know how to use HSAs and FSAs,
right,
to buy $3,000 glasses is $5,500 of earned income for me.
Yeah.
But because I use deductions, it's like $1,500 of earned income. So all these things are there. Like if people have kids or elderly parents that you take care of, inside medical benefits through your employer, there's a thing called dependent care FSA. And if you take care of kids or adult parents, you can get about $5,000 deduction every year. So you enroll in it, $5,000 goes into the account. And then if you have daycare or taking a mileage reimbursement or deductibles or whatever it is, right? After school programs, au pairs, all these things, you just fill out. I use the $5,000 for my dependent care. And then you just get a check cut to yourself for $5,000 tax free. So you get a $5,000 deduction and then you get $5,000 back to you. Yeah. So not only did you not pay tax on the $5,000, but you got a $5,000 deduction. It's just a simple form you fill out. That's called the dependent care FSA.
Wow.
And so all these things,
information.
Yeah, it's all information. It's like tax deduction, tax-free money back to me. So it's all out there. But again, it's easy for me because I've spent almost 20 years learning it, right? And it's a little bit of work and effort. But if somebody's a willing participant and say, I need to fix my situation, there is resources out there. Gemini, Google Gemini, you can type in, or Chat GPT. What is the best insurance for me to have through my employer? Like, start there, right?
Yeah.
Reach out to you, find me, whatnot. There's resources. But I'll tell people this. If you respect or admire a person, get information from them. But if they are not someone you respect and admire, don't listen to them.
Yeah.
Right? Like it's almost as simple as that. It's like, who has a fat personal trainer? Right? Like, why would you go to that person?
People do.
Yeah, people do. But why? Why would anybody do this? Like, well, why don't you practice what you preach? Like, I want to learn from someone who's jacked, right? Like, and ripped. And it's like, that's who I want to learn from. And so again, it goes back to even the people who love me the most, like my parents, right? The advice they gave me was horrible for what I wanted to do for my life. Right?
Yeah.
Right? Like,
my dad said, like, what?
Yeah. And it's like,
it's not a disrespect to your dad. It's just like, hey.
That's all he knew. It was from his lens.
Yeah.
Like, he knew from his worker lens, right?
It's so
like,
bad.
And it's crazy, right? Like, limited belief. Don't run that fast. You're going to get hurt. Don't climb up there. You're going to get hurt.
Right.
Money doesn't grow on trees. You can't do that. It's expensive. Like, all those are limiting beliefs. And I'm like, man, like, if I had followed the people who love me the most, not because they didn't want me to fail or they wanted to protect me, but the advice they gave me was from their lens.
Right.
Right. And so,
and it's what helped them. At that time, at that point.
When someone can have a family of 7 in LA on one income being a construction worker.
Right.
Like, that was a way different time in the 80s than it is today.
Right.
Like, the house I grew up in is probably worth at least $1.2 million. Today, that's someone with a $400,000 household income.
Yeah.
My dad was 10x that, less. Yeah. And he had that. Like, imagine 5 boys and a stay-at-home wife.
I'm curious. Do you know how much he was making back then?
Yeah, back then it was about $40,000 a year.
He was making $40,000 a year,
which is interesting because if you look at the 80s, right, and this is directionally correct, it's not exact. Yeah. In the 80s, the average house in Los Angeles was something like $75,000. The average household income was right around $48,000, $50,000. Okay, so it was roughly about, maybe call it double for a price of a house.
Right.
Today, average household income is about $60,000, and average house in Los Angeles is $900,000. So the average household income has barely gone up, and the cost of a house has skyrocketed. But here's what's even more interesting.
Are you sure it's $600,000?
The average house?
Yeah.
No, it's about
LA?
No, it's about 900. Close to 900.
900.
But here's the interesting thing about that stat. The average household in the 80s was a single income.
Right.
Average household now is a dual income. Yeah. So that number, even though it seems higher, it's actually less because now there's 2 income households more prevalent than it was in the 80s.
That's fucking
So all those numbers you hear, right? It goes back again to these people who just say these numbers, but there's more to it than knowledge. It's even worse than people make it seem.
Yeah.
Because, in the 40s, 50s, 60s, 70s, 80s, when they're giving the average household income, that was primarily on one income. The other spouse stayed home.
Right.
It's just a fact, right? When you look at these things and account for these variables that just a raw number doesn't say, right? It's even worse than people make it seem. It's like inflation, right? I love the idea of inflation because everyone knows and they hear it. Oh yeah, inflation. If you actually understand inflation, it is scary. Like, look at Super Bowl. Okay, Super Bowl, 30 years ago. Say me and you are buddies, we're longshoremen, right? Which is a great career, a great job. Longshoremen, people work at the port, right? Great union, great everything, right? They have a great life. Longshoremen, say me and you are longshoremen. We're like, you know what? It's 1990. And we're like, you know what? When we retire in 30 years, we're going to go to the Super Bowl as boys. That's going to be our thing. Every year we're going to go to Super Bowl.
Yeah.
So we look at 1990, average Super Bowl ticket was $300 each. Okay, so me and you say, okay, we're going to live for at least 20 years when we retire in the next 30. So we need 20 years of Super Bowl tickets. So let's create a bank account. And we're going to put $300 a year for 20 years. So $300 a year times 10 years is 3,000 times 20 is 6,000. So all we got to do is save $6,000 over the next 30 years.
Oh, wait.
Right?
Like straight up comedy.
So we're going to save $6,000 over the next 30 years, and we're going to put it in a piggy bank or a shoebox. Me and you are going to make sure we do what we said as boys, as dock workers, to have $6,000 to go to every Super Bowl. We do it. We get there. We celebrate 30 years. Now, all of a sudden, it's 2023, okay? Let's go to the Super Bowl. Average ticket in 2023 was $5,000. Average Super Bowl ticket. So now, where we said it's $300 a year, we didn't account for inflation.
Right.
So now, when we were supposed to go every year with our $6,000 each, we only have enough for one Super Bowl. That's inflation. That people don't tie it to the things you want to do.
Yeah.
And that's what's going to screw people. And it's scary. There's a thing, and everybody can do this. It's called the rule of 72. It's you take in your calculator, you put 72 in, okay, 72, and you divide it by the inflation rate. And that shows you how often money is going to lose half its value. So inflation, before this crazy inflation, the 30-year average before 2024 was 3% for the previous 30 years. 3% average. So you take 72, you divide it by 3. That's 24 years. So every 24 years, money loses half its value. Okay. So if you're not accounting for that and you say, all I need is $100,000 a year in 24 years, and you have $100,000 a year. Well, in 24 years, your $100,000 a year is going to buy what $50,000 a year buys today. Yeah. So half the value gone.
Right.
And that's where all the fun things you want to do after dedicating your entire life to work, you're going to want to join the country club. You want to play tennis. You want to buy your dream bike. You want to take the grandkids.
Go to Italy. Milan, the boat, and the yacht.
They don't account for inflation.
Right.
And so that rule 72 is really...
Well, I was going to bring this up earlier. That's also the problem with not investing. If you don't invest and you say, I'm going to save my money because saving my money is way better.
Because the market's risky.
I was going to say that earlier. That's terrible.
Get this, though. Right now, we're about a 6% inflation, and that's on the consumer price index. The real inflation is like milk and eggs and tea, right? Where it's like double the price since COVID, right? Like that's the real lumber, right? Building materials.
Imagine if tariffs go up.
It's even worse, right? And so back to the rule 72, let's just say inflation goes at a moderate 4% average, right? Because people are like, 1% isn't that much more, okay? 72 divided by 4, now every 18 years, your money loses half its value. So if you're 40 years old and you're going to live to be 90, that's 50 years. So 50 years divided by 18 is, 50 years divided by 18 years, because that's how long it takes money to lose half its value, is 2.75. So we'll call it 3. So in your lifetime, money's going to lose half its value 3 times. So if you have enough saved, $100,000 a year for you to live the rest of your life, when you get to that point, 100 divided by 2, that's one time, $50,000. $50,000 divided by 2, $25,000. $25,000 divided by 2, that is what, $17,500. So $100,000 is going to have the same purchasing power as $17,500 today. And nobody believes it, but it's just math. But on that same token, to your comment, the rule 72 works with your rate of return. So if you get, say, 8% return in your 401k or in your IRA because you're investing in the S&P 500 index, set it and forget it, put money in consistently, called dollar cost average. Every paycheck, and that's why employer benefits are amazing, because every paycheck, money goes into the investment selection. So right now when the market's bad, you better hope for your payday, right? Because it's buying low. Every time it buys up and down, up and down, up and down, every single paycheck. That's called dollar cost averaging. So if you average an 8% return on 72, you divide it by 8, 9 years. So it takes 9 years for money to double, 18 years for money to lose half its value, 9 years for your money to double. If you get a higher return, if you get, say, a 12% return, now your money doubles every 6 years. And if you're not invested properly, because it's too risky, and your people in your lunchroom are going with this fund because it's less risk, supposedly, right? Because they're not financial advisors, but that's what they do. They go to a lunchroom and they talk to all their coworkers. And this is what Billy does or Diana does. I'm just going to do what they do because they like stocks and stuff. They're into this stuff. Nobody's into the stuff that is not a financial advisor. You may think you're into it, but you don't know the ins and outs. But say now, in that example of doubling their money every 6 years, if people can do that, they're now put themselves in the game because their money is outperforming losing half its value. And that's how you get ahead, is these baseline understanding of my money's not going to buy what it buys today. Okay, I need to outperform that. I need to be in the market. But if they have a low fund that gets a 4% return that's less risky, it's the most risky thing in the world, because now it takes 18 years for your money to double. It takes 18 years to lose half the value. So you're never going to get ahead. Your money's doubling in 18 years and your money's losing half its value in 18 years. Right. So that right there,
it's like zeroes out.
It zeroes out.
Yeah.
So you have to average a higher return and really understand inflation. And so again, there's so many of these things that people just need to understand. And now it's kind of a problem because you hear in TikTok, Instagram, you have these finfluencers who've never done the job, right? They've never done the job. They don't know how things are. Open a Roth IRA and put away this. You'll have 1.5 million in 30 years. That's true. But 1.5 million is like me telling you, you're going to have 250,000 today. You can be like, I'm not going to live off. That's great. It's cool. But I can't sail off to the sunset on $250,000 for the rest of my life. So you have to really understand that. And so what I try to do is educate people where you're at, where you want to be, and how do you get there? Like that, the understanding of money is critical to being able to have money today, tomorrow, and forever. But when you're not working with a honest, straight up and knowledgeable advisor, which is about 1% of us, like 1% of people are good at anything. Like look at motorcycle riding. You look at people, look at the chicken marks on the rear tire, right?
Right.
Like what percent of people are dipping tight into corners, right? And using the whole tire, right? Like 1% of anything is
even riding it. Yeah.
Even riding. Like most people aren't great motorcycle riders.
Most people don't ride their motorcycles.
Yeah. It's like,
they have 2,000 miles a year, it's like,
And so it's like, how do people have to be willing to learn and willing to get engaged? And if they do, there's so many baseline things. And again, I'm not talking to wealthy people who have resources. I'm talking to us average working people. No matter if you're a bartender, you work at a warehouse, you're a nurse, a police officer, firefighter, if you're a doctor that's an employee, if you're an attorney that's an employee, we all have jobs.
Right.
And so those are the people who end up getting screwed the most, is because they assume their employer benefits are going to be all that they need.
Yeah, it was like I heard this thing where it's like COVID was enforced. The rich people didn't do it. The poor people didn't do it. The middle class got screwed.
Yep.
Taxes. The rich people are not affected. The poor people are not affected. It's the middle class. It's always the hardworking people.
I think it's about 92% of all taxes paid in America every year is paid by the middle class.
Right.
Like it's not the tax the rich, right? It's
which is a terrible idea.
Right?
Because I always give the example, you tax Jeff Bezos extra money, he's not going to pay for that.
Nope.
All the Amazon employees, all the prices on Amazon, all the stuff that's being sold, all the deliveries and shipping.
It's like what's happened in the last week with the stock market.
Yeah.
Elon Musk went from like 350 billion down to like 290 billion. We showed him, right?
Yeah.
Okay. What about all your grandparents, your mom and dad, whose 401ks have plummeted?
Right.
Because of this.
Right.
It doesn't hurt
so fucking terrible.
These billionaires.
Right.
It hurts average people where the Tesla's in an index and it's for retirement,
so
pension funds, like employer benefits. Like they cut off their nose to spite their face.
And it's the same people that 6 months ago were saying, "Oh, the Tesla's the
savior
model,
of the universe."
Savior of the universe.
Yes.
It's the same. Yeah,
it's the same people, and so it's like, at some point,
it's terrible.
When do we stop cutting off our nose to spite our face? When you're a billionaire, they're not going to get hurt by hurting them with money. Right. Like if they lose $100 billion and they still have $200 billion, you think we hurt them?
Yeah.
Like it's unfathomable, right? And again, it's not a political comment, right? But just to your point, we're not going to hurt Bezos, Musk, Warren Buffett, all these wealthy families. They're not going to get hurt.
Well, there's not only the aspect that they're not going to feel it and it's not going to hurt them. It's going to affect all the employees he employs. It's going to affect all the products that everybody buys.
People getting layoffs.
Right. There's going to be cuts. So that's the biggest issue that people don't realize. They think, tax the rich. It's like, guys, it's not that you're taxing them. They're employing so many people. I mean, how many people work for Amazon?
And they have resources that will
Unlimited
find loopholes to not pay taxes.
Yeah.
Right? Like it's even something as simple as moving out of California or New York to Florida and Nevada.
Right.
0 state tax. Well, guess what? 13.5% state tax in California for someone who makes $10 million a year, that's $1.3 million extra in their pocket by just creating their domicile in Nevada. That's not even like, I have crazy resources. That's just smart. So those people will say, okay, let me just move to Nevada. People in New York, let me move to Florida. No state tax.
Right.
Like they will find ways that are super simple.
They live there 6 months in a day, right?
6 months in a day for the residency, right? Like, and they get all the benefits. And so this whole idea is profit for the people, really, right? Like, how can I help average people that don't want to hustle till they die or start a business or do these things? Most people, even if that is intriguing to them, they just want to work, go see their friends and family, hang out with their kids, have their vacation a year, and just enjoy their life and not be that much stressed, right? That's what the majority of people, 90% of people just want that life, right? And there's nothing wrong with that. It's simple.
Yeah, simple.
How can I help those people get the most out of everything? And that's where if I worked as a financial advisor to try to get them as clients, I wouldn't survive because they don't have investable assets. So I want to transition to providing knowledge and helping people understand money and understand their benefits and what moves they have to make so that way they are not reliant on people who don't want their business because they don't have $250,000. Like it's true. Like it's funny. You see these things. I saw a Morgan Stanley advertisement the other day. And it was like a Gen Zer, fashionable, one of the female with one of those big hats, right? Fashionable dress, right? And it said, not for rich anymore. Get started investing with Morgan Stanley, $5,000 minimum. I'm like, 5,000 minimum? Like they're so disconnected.
Yeah.
Average people don't have $5,000 minimum to invest and buy a Morgan Stanley mutual fund.
Right.
Like it was just the funniest thing to me. I'm like, that's how disconnected this industry is, where they think it's not for wealthy people anymore. It's for average people, 5,000 minimum. Like average people don't have that.
Especially in the United States. Average?
Yep, average. And they were bragging about it in an advertisement.
Yeah. It's
not for rich anymore. You can do it too. 5,000 minimum for a mutual fund. I'm like, man, they are so disconnected. And it's not a jab against Morgan Stanley. That's their business, right? Their business is to work with wealthy people. But what firm, I've worked for some of the biggest companies in America. They all have their ideal client profile. We want people that above $150,000 a year, right, that are somewhat educated, that want to give us the money for us to do it for them.
Yeah.
Right? Like, but 150,000, we're talking about, that is like top 6% income earners in America that make more than $150,000 a year. Everyone else is left in the white noise. Just figure it out.
And that's the biggest market.
That's the biggest market.
But they're fucking, it's tight.
But nobody's going to venture off and say, yeah, we want to help average Americans who make less than $100,000 a year.
Yeah.
Because financial advisors get paid on asset growth.
Of course.
And how much money we have and manage.
Yeah, it'd be too much work.
There's just a big disconnect.
Back to the quality over quantity.
Yep. It's just a big
Even though
disconnect.
there's a big quantity.
There's a big quantity, but they won't make a living. And so I want to transition to providing, I'll let, socials pay me, YouTube for views and clicks and likes, and people who like, Fidelity says, hey, I want to sponsor you and pay you because you promote us. I love Fidelity's product, right? It's a great product.
Yeah.
If insurance company, whatever it is, I'll let them pay me to keep my service going of educating people. That's really what I want to transition to. And I'm trying to figure it out, right? It's never been my world. It's never been.
You just got to dive in. You got to grab a camera and just fucking dive in. And that's it.
Yeah.
And when you see this published, you'll be like, oh shit, I should be doing more of that. Whatever the case is.
Because I think true advice, like, is coming due. I think there's a changing of the guard.
Authentic advice.
Like people who like, I want to hear from a doctor.
That's why podcasts are blowing up.
Because it's real advice.
Yeah, it's real. Yeah, it's real advice.
It's not someone who says, a doctor is like, oh yeah, I'm not a medical doctor, I'm not this, not that, but I believe in holistic health, and this is what you should do.
Right.
I think they said, I've been a plastic surgeon for 20 years. This is what face fillers really do for you, and this is what this works.
I mean, this is why Joe Rogan's podcast blows up, because people know that, you know, a CNN reporter or journalist is reporting for CNN, and that's what they're told and instructed to say. You know, people want authentic information, authentic conversations. The other thing is, one of the, you know, I was telling you earlier, like if you look at my financials of why I do this podcast, it's crazy. It's fucking crazy. It doesn't make sense. This is financially irresponsible. But in today's society, you know, the chances of sitting down and having a one-on-one conversation with people is almost impossible. Mm-hmm. It's almost impossible. So that's another thing that I appreciate about this, is that I can say, hey, put on the headphones, mute your phone, let's have a conversation and get educated and share it. You know, it's just I'm documenting it. Yep. You know, and that's another reason.
Yeah, what you're doing is so necessary, and it's like, it is especially being like so niche market, right? Like I used to ride, I don't ride anymore, right? I used to, I loved it.
It's funny because it's not a motorcycle podcast.
Really?
Yeah.
I thought it was like, but an emphasis.
Everybody does. Everybody does, and you know, and I like clarifying it. It just sounds crazy. Before I didn't have a studio, so I had a motorcycle, and I'd put all my gear on the motorcycle, and I would ride boundlessly wherever I can get an interview. Crazy. So I would ride to like Ventura, I'd ride to Santa Cruz, I'd ride anywhere I could to get the interview. So it was more about like me going, you know, I'd ride boundless. But that's why I've had boxers, actors, comedians, you know, businessmen, you know, and a lot of people do share. Here's the other thing. Okay, you ride motorcycles. You love motorcycles. We could talk about motorcycles for 5 minutes. Sure. What do you do? I'm an attorney. You know, I do this, that. What kind of attorney? You know, it's there. That's my passion. But the actual name, and that's why I've contemplated on changing it. But now it's like, you know, Ride Boundless. You know, life's a ride.
Actually, now that I know the story, it's actually pretty epic.
Yeah.
Right. Yeah. Like and right.
It is.
Yeah.
It's just,
we're on a ride. We're on our journey.
Life's a ride.
Yeah. We're on our journey.
It, you know. And
how do we be boundless?
Ride Boundless. Yeah.
Yeah. It's such a. It's so fun and cool. Like, it's just, you know, talking, you know, learning about different things. Like,
my last conversation was soccer. Yeah. You know, and I don't even know. I've been going to soccer matches. I've been watching it. LAFC's pretty cool. They got the black and gold. I'm like, this is fucking dope. Cool. You know? Yeah. And I had an expert come in here and talk about soccer. I'm like, dude, this is fucking wild. This is awesome. I'm starting to like this.
Yeah, it's amazing how many people have like inside knowledge to just different things, right? Like it's and that's where I found a lot of my knowledge has come from curiosity, but I've worked with tens of thousands of people. I've learned what they do, how they make money, how they save, what their careers are. So I have an insight to so many careers.
This is why it's so crucial for you to be here. And this is why I'm so appreciative you're here, because you're sharing this information. And we're going to have to do this again. I keep telling people that when I have people a second, third, fourth time, those episodes do better and better because now they're familiar. Yeah. You know, the first time I'll be like, and then the second time I was like, oh, yeah, oh, shit, and this is good. They go back to it.
You know what would be cool if it could be worked out is if send an email, if you have an email list or people email you and say like, oh, I want to ask a Q&A. So like when live. Yeah, like people ask me Q&As, I can answer so many things easily, right? Yeah. In the sense because everyone has their own unique questions.
Well, because you come with a good friend of ours that is willing to help us, I could definitely have a computer and we could do a live and you can read out the questions and put it up. Yeah, shout out to Jordan.
Yeah.
Which has been on the podcast.
Yeah. We should do that for sure because I think everyone benefits from people's experiences and questions.
Of course.
And so it's a lens, right? Me and you can ask our questions from our lens, right? And other people can ask them from their lens. So I think if you're down, I'm down for it.
And then we absolutely, I'm down. And then we could fight with people online.
Yeah. Like, no,
you're stupid.
Yeah. Someone says, oh, these guys they think they're buff, right? Start insulting us. Yeah, but
meet you next to the slide, next to the monkey bars, cabrón. Let's go. No, but for sure. I'm actually going to try. So the Ride Boundless is going to work very close to the Distinguished Gentleman Ride.
Oh yeah, tell me about that.
Yeah, so DGR is it's a movement. I believe it's 500 cities, over 500,000 motorcycles worldwide that decide to ride on the same day. This year it's May 18th, and it's in all the major cities. And we raise money for Movember, which is men's mental health and prostate cancer. And last year, Jaime and I went to Mexico. We made Mexico #1. They were they had the most riders, but they were like at the end of the list on raising funds. We went out there and we were #1. So this year we're gonna make LA #1.
Oh, that's cool.
So it's gonna be super badass.
Where do they ride to?
So usually, well, it's a secret. You got to donate. Like if you want to be part of the ride, you got to donate. I think it's like $50, but it's all for men's mental health and prostate cancer. And the night before the ride, they say, hey, we're going to meet, at the Greek Theater, or we're going to meet, whatever, Hollywood, whatever the case is. And then they have a route, and the route's blocked off. LA, I think, is capped at 500 riders. So it's 500 people, and then everybody's dressed up dapper. Everybody's suits. Like suits. Everybody looks elegant. The women look beautiful. The bikes look. It's if you Google it, it's so cool. And the cause is cool. So I'm going to be doing a lot of the podcasting. I'm going to be interviewing a lot of people. Ricky Rocket from Poison. He's going to be on here. He's a strong supporter last year, and he's going to be a super supporter this year. All right, he was a super supporter last year and this year.
Oh, that's cool.
So, but there's a couple of celebrities. But the reason I bring it up is because we were talking about doing lives. We're going to have I don't know if I could talk about it, but we're going to get a location, and they're going to set me up in a booth that has an amazing view of the city, and we're going to have like an event there, and I'm going to do a live right there where people can, talk, and hey, DGR, and what motorcycle, and this, that.
Yeah. Oh, that's cool.
So,
that's cool. Yeah, I would love to do that. Let's set up, because it's, everyone will benefit hearing other people's questions and stories.
Of course. And we could even do it like realistically, it's all about content and being, consistent. We could even do it monthly. Maybe I go there once, you guys come here once, whatever the case is, and we figure it out. So we get different scenes. Yeah,
because it's so cool how you're what you do. It's a great service. You're providing education, awareness, fun times, right, to people. It's
happiness,
windshield time, happiness. But there is so much of a need for people to have just the real stuff. Even when people are starting to ride, right? What type of riding do you want to do, right? Do you even know, like, what a starter bike? I mean, there's so much benefit to it. What type of gear you should have, right? What type of helmet you should have. People, no one should ever get a cheap helmet, right?
Or a used helmet.
Or a used helmet. Yeah, people, oh my God, used helmets, like, Jesus. But a lot of people don't even know that.
Or same thing. I think I mentioned this before on other episodes. But people will save $5,000, $6,000, $7,000 to buy a used bike, but won't have $1,000 to buy gear.
Yep.
It's like to have $1,000, $1,500 to buy your gear. Have $400 or $500 for your insurance.
Yep.
A lot of people ride dirty.
It is such and everyone knows how risky it is to be on a motorcycle, right? Like, it's literally saying, why would you not protect yourself? Like, this is where you be selfish. Right. Let me make sure I am covered for me on my motorcycle, because I understand insurance. If something happens, the probability is low, but the damage is catastrophic.
Yeah.
Right. Like, it's a low probability, but the consequence is catastrophic.
Well, I'll also add to this. I've been riding for 24 years. I mean, I've been riding forever. And here's the thing. This is my statistic, but 95% of motorcycle accidents is rider error. It's rider error. Like, everybody's like, oh, motorcycles are dangerous, because the cars are on. No. 95% is rider errors. And to add why that number is one, because of all the accidents that I've seen. Two, most of those people don't have the right insurance. Most of those people have not enough insurance. Most of those people are not riding the right gear. Most of those people didn't wear the helmet that day. Most of the people wore the stupid skinny helmet that looks fucking cool instead of a regular helmet that could have saved their, a brain bucket, whatever the case is. That person that lost his foot that day, guess what? He was wearing flip-flops on his fucking Harley. So there's a lot of factors into the whole thing, but like, as I seen it, it's 95%. Jeez. John, we're at an hour 48. We fucking killed it.
That was fun, dude. Yeah, I talked for hours, but no, I appreciate you having me on.
Of course,
let's definitely do this again. It was really cool being here.
No, we're gonna have more ideas. Another idea that I had was next time you come, I'm gonna try to save some videos. Maybe we should all save some videos that we see on social medias, and when people are giving these financial advices,
oh my God,
we can say bullshit or
I got a bunch.
Is this
of
bullshit or not bullshit? But
99.9%.
Hey, wait. We'll see.
Yeah.
Depending on the videos that Jordan and I save, maybe ours are 99% fact.
Yeah, I like to challenge us, go toe to toe.
Yeah, but that would be fun.
That'd be fun, dude, for sure. Well, thanks, man. I appreciate you, dude.
Man. Sorry.
So much fun, dude. So much fun. Great times.
That's a wrap.